Gentlemen, we're about to get started with a very interesting panel discussion around building a symbiotic relationship between banking and fintech. Now, if you take a look at the fact that customers these days are expecting a lot more from banks today, because somewhere or the other, they're actually anticipating a full digital experience. While banks, on one hand, already have the infrastructure advantage, or for that matter, an inherited brand recognition, fintech firms, on the other hand, we've seen how they've excelled in customer experience and also providing that kind of tailored products and services. So this is where we arrive in terms of understanding where can we build that symbiotic relationship between fintech and banking. So to help us understand more on this, we have a very interesting panel discussion and even more interesting set of speakers lined up. So let me go ahead and invite them on the stage. Firstly, to spearhead the session, we have with us Mr. Abhishek Arun from M2P. He's the President, Platform Strategy and Commercialization with M2P, who will be spearheading the session for us. Joining him, we have with us Mr. Souparno Bagchi, who's the Chief Operating Officer, True Balance. We have with us Mr. Hemant Vishnoi, Founder, Enkash. Mr. Naman Kapoor, Head Cash Business, Citibank. And Mr. Anuj Kacker, Founder, Freo. So while I invite all our speakers on stage, can we also have a symbiotic round of applause? Let's bring that energy back in the air. And let's gather a little more about this balance that we're trying to draw between banking and fintech. And thank you so much, gentlemen, for joining us this morning. I'm going to quickly hand over the proceedings to Mr. Abhishek Arun. Over to you then.
Hi, good morning. I think we're starting the day with an interesting topic around symbiotic relationship between fintechs and banks. Easy answer for this: banks need fintechs, fintech needs bank. But we've got a esteemed panel today, representing both banks and fintechs. I think it's slightly underrepresented on the bank side. Anybody want to take a guess who's the banker on the table? If you've not heard, who's come in is the guy with the suit. So And that's the one change which you start off with. But on a serious note, I think it's an important time, and the phase of the economy has changed for a time where fintech were small companies who just kind of questioning how things are in the financial services space, to today being an important part of the financial services, with some companies even getting listed. And fintechs are now getting into the regulated space, applying for licenses. And banks increasingly, if you hear their narrative, they talk about them as fintechs or tech fin, so to speak. So the lines are blurring. Banks becoming fintechs or tech fins, fintechs becoming like regulated entities, or increasingly the regulator wanting them to look at license or to operate in businesses. So you had PPI, then you had NBFC, today you have PAPG, each of the licenses coming in, and the fintechs trying to get into that space. And the fact of the matter is that RBI today even has a fintech department. So I'm going to start the session by posing this question, which is that are banks becoming fintechs or fintechs becoming banks? When I say banks, meaning financial regulated entities, and how do they see this space kind of evolving? Starting, Souparno.
Yeah, firstly, thank you for having me here, and again, thanks Abhishek for it. The way I look at it is like, yes, the banks and the fintechs are coming closer, but does that mean that the lines are blurring in terms of their core DNA and identity? I guess not. I can tell from my own personal experience and journey, I spent the first 20 years of my career in the enterprise and in the banks, and now I'm in the fintech space. So the DNA remains different. And that's what matters, and that's where is the core source of the leverages of collaboration, leverages of partnership. But I do agree to the point that there are areas where, let's say, the space and the spectrum where the banks were operating, they're coming towards an overlap area of the fintech, and vice versa. There were certain constructs and contours of the fintechs operating, like, for example, the licenses, etc., their ability to work with the regulators. The fintechs are also getting into the space and the spectrum of in an operating style and model, like the way the banks, they do it. But if you just double click on the core competencies, if you double click on what's actually the DNA in terms of what fintech can provide, and for example, what a bank can provide, I still still there is a core identity which needs to be leveraged in its own merit.
Okay.
Yeah.
Naman, why don't you?
So, Souparno, I think primarily agree that there is a core DNA, there are core strengths that the banks and the fintech provide. But I would, if we look at what is happening with the banks and fintechs, right? If you look at the banks, then Abhishek started with TechFin, right? So the banks, just from a technology and a digital tech stack, going onto public cloud, microservices, all of that piece, right? Banks have started really upping their game in terms of the technology and the digital aspect, as well as things that the banks would have never done earlier and would just have let the fintechs play in it, right? Like the ONDC space, a very evolving ONDC space. A lot of banks are very, very active in that space, working through seller apps, buyer apps, the entire settlement mechanism. A few years back, banks would not have played in that space, right? Another piece, as we were speaking to Freo, was that from a bank's perspective, APIs and the open banking and the API tech stacks, these are things that banks have traditionally not been so focused on, but these are all things where banks have started moving towards. From a fintech perspective, the licensing aspect through various mechanisms got spoken about, but beyond that as well, right? Balance sheets and the balance sheet aspect on liabilities and deposits used to be where the banks used to play in, and we have players already on the both sides of it, right, including investments. So I would say that there is still a core DNA and there are still some lines, but gradually and with the progression of time going forward, the lines are blurring, and there will be more and more blurring as we go ahead, but still some intactness of the DNA and the strengths of each would remain.
So, Hemant, you've kind of built a great model on corporate cards and corporate expenses. And this was a space where banks have always been very strong in. So could you share your experience in terms of, and where are the lines blurring? Do you really need a bank to still operate, or you can operate independently? Where do you see this?
No, I think, so I think, I kind of, want to take a little different view. I think, both fintechs and banks can't replace each other. And there will always be a line between banks and fintechs, definitely, right? Essentially, whether it's a thick line or a blurry line, but there'll be always a line, right? Essentially, the reason is very simple, that who controls the money, right? Control is with the banks, right? What fintechs are, right? I mean, if we go by the definition of fintech, it's financial technology, which is used to deliver financial services, and who provides that financial services? It's bank, right? And essentially, we were talking about the licenses part as well, right? Especially around PAPG. And then payment space is a great example, right, to just strengthen this case. Essentially, payment gateways were always provided by the banks, right, essentially. And then what fintech came up with about the experience, right, the customer's experience. Then, came this licensing regime, which, talks about the framework around payment processing and fund flows. But ultimate control is with the banks, right, in terms of money. So I think, in my view, fintechs can play the role which banks certainly can't, and banks can play the role which fintechs certainly can't. So that's the key difference which is there.
Sure. I think I agree with my esteemed gentleman colleague here, but let me try and add a little bit of a different perspective, all of them. Let me try and add a little bit of a different perspective here, which is, if you view it from the lens of a customer, he or she thinks that the lines are getting blurred and getting blurred massively. And that's why the regulator needs to step in to protect customer interest, right? I don't know, is Freo a bank or is a fintech? And today so many new models keep coming up. I have not heard of certain bank names for that matter in my lifetime. So they are regulated entities. So from a customer's perspective, I think there's a lot of blurring. If you look at the ecosystem players, banks, fintechs, and all the other people who partner the ecosystem, we are very clear, tum us taraf ho, main is taraf hu. And like he said, there'll always be a line, because at the end of the day, that's what the governor has spoken multiple times, that either you have to be in a regulated entity or you have to get attached to a regulated entity, because otherwise it becomes very difficult to govern, right, and keeping the customer's interest in mind. So there'll always be the line. But I think that, to achieve our goal of the next, to get to the 5 trillion economy, Amrit Kal, to get all of that, I think the way to look at it is that it's not about banks wanting to be fintechs and fintechs want to be banks. I think both of them need each other, right? I think one keeps the other honest. So I think there was a period where fintech innovation went through the roof, some good, some bad. I'm not going to get into that judgment right now. And then the banks felt threatened. And then the RBI stepped in and said, this product is allowed, this product is not allowed, et cetera, et cetera, et cetera. But suddenly a new channel of products came open. Now the banks are saying that, you know what, now that I know what's the right way of doing it, let me take that product up. The fintechs realized that, for me, longevity is far more important and regulatory stability is far more important. So let me get a license, but that does not change my DNA of being a tech company and moving very fast and trying to experiment and push the boundaries. So I think both banks and fintechs keep each other honest. We both want each other. It's that happy marriage or, however you...
Love-hate relationship? Or
it's
is
a love-hate relationship in some ways. We did a recent... So I think that is where, at least the way we think about it, beyond just, the fact that, how are each other playing with each other, but I think they both feed into each other. That's the key part.
But, in your case specifically, you were a fintech and then now you also have an NBFC license. So how do you see these two worlds? Is it very easy to kind of move between these two worlds, or are you internally, as talked about the DNA aspect of it? What's the DNA? The DNA is a fintech DNA with an NBFC license to serve customers better, or that is a different world?
No, it's clearly a fintech DNA with an NBFC license to serve customers better. I can't say the other way around to please anybody and then be untrue to myself, and I will just run the company to the ground if I just keep having these split personalities. So we'll be very clear about what you are. That does not mean that it's something bad. It's not a bad word to be a fintech from that perspective. Today, there are 90% of fintechs who don't have a regulated entity license or whatever else. They are doing very well. They are the need of the hour. You want to take financial inclusion to the last mile, you need all the fintechs, the LSPs, the TSPs, and so on and so forth. Not just the regulated entity. If that was true, I don't think we would have had such poor credit card penetration in India, if that was true, right? Or for that matter, even regular credit penetration in India would not have been that poor if only we were dependent on the regulated entities. So everybody plays a role. So we are very clear that we are a fintech first, but we are very well aware of our responsibility towards customer data, the laws of the land, what's the right way of doing it, and we believe that's the right thing for all of us. The bad players get weeded out and the good players continue. So all these regulations that we spoke about, our business is not impacted. Yes, there's some headaches in terms of more compliance issues and regulatory filing, but that's probably the right thing for the industry, because the bad apples get weeded out and the people who are still standing are probably the guys who will be standing for the next 20 years, and that's where I'm here to build a business for the next 20, 25 years, and I want to be around when we hit that 5 trillion economy, contributing to it. So I think that's important, but I'm not going to lie and cheat with my DNA.
So now I'm going to ask the next question to you in terms of, as a banker representing a bank, what frameworks do you consider while partnering with any fintech? Be good for the audience to also kind of know what are the various things which you consider. Is it distribution only, or is it something else? What are the kind of stuff which a bank kind of looks at?
Sure. I think a lot of factors, Abhishek, go into it, but some of the key ones, right? Just the top 3, 4. So first would be the underlying client need or the problem statement, right? That how big is the ecosystem? What is the end client need, pain point, problem statement that the fintech is trying to solve? How does that turn out into a profitable business model? How does the product or the capabilities turn out from a perspective of the whole tech stack, right? So the product would be one part of it, the business use case would be one part of it. Then I think whether we look at strategic partnerships and I think the whole investments or any of those things with a fintech, we also look at the whole team behind it, right? Some talented co-founders on the stage itself, and what is the entire experience of the team behind it? Who are the co-founders? What's the experience? All of those facts come in. And another last key component that comes into play is the whole target segment. That what is the client target segment that those fintechs would play in? what is the client target segment that that bank would play in, and how the two strengths of the fintech and the bank can come together to finally deliver a better product or a better client experience. So those will be 4 or 5 factors.
So Anuj, in your experience of working with banks, how did you partner with banks, or was it you needed a bank, so whichever bank said yes, you moved ahead with it, or what framework did you apply when you were looking at the other side from a marriage perspective?
When you are starting out, you are like that only. You can't be choosy. So beggars can't be choosy, right? So at the start, that was what it was. Honestly, we were very, very lucky to have partnered with RBL Bank. They continue to be our partners today. We launched with them. They are one of our largest partners, and we have a great relationship because they co-created the product with us. So it was a great meeting of minds, great meeting of products. Probably rare to happen, but it just happened and clicked in the right people at that side. Was great. But today we are a little bit choosy. Today we are a little bit more picky than we could be because for whatever reason we have set a certain cadence in our business and a certain, we need a certain enthusiasm plus technology from the other side, and or the nimbleness to problem solve, because there will be problems once you integrate. So I think you end up looking at those things. When you are young, when you are just starting out, you will do everything. We went and told the banks, we will build it for you. You don't worry, and you just take my code. Doesn't matter. Today I will not do that, and so I will, because I have a choice. So it's just a matter of supply and demand. At that early stages, nobody wants to partner with you, so you'll pick whatever. Today, people want to partner with you, you'll be choosy. It's really about that.
No, I think, I kind of, agree with what Anuj said, right? I mean, in the beginning, you try to, form a relationship or partnership, whosoever is coming in your way. But effectively, you also need to understand that, over the period of time, both the parties, right, need to understand where they actually stand, whether, they all want to be in the same game or have the same objectives, right? Essentially, the objectives are around customer or product, right? And then over the period of time, you also realize that you don't want to be treated as inequally, right? Essentially, there is a typical mindset which is there, right? Where any fintech is kind of treated as a vendor, right? And I'll be very truthful here, right? And then subsequently, as we move along, that treatment has to go away, and essentially to form a deeper partnership. If that is not happening, then obviously you need to choose your path. You need to move away from the relationship and figure out a new relationship which can be foster on 2 primary aspects. One is obviously on the customer side, and the second one is on the product innovation side. Alongside, obviously, revenue and monetization is important for both the parties, right? Both for banks and fintechs. So I think, it's a journey. People actually realize over the period of time. But effectively, what turns out as a best partnership is where both the partners are equally treated and there is equal opportunity to earn revenues out of it.
Maybe I'll just add on and totally agree to that. And again, extending on Anuj, what you were referring to, if you would ask me this question 2 years back, it was more of transactional, more of sales. And again, the connectivity, or let's say the leverage which we had on the bank side and vis-a-vis fintech, that aspects of inequality was like quite evident, and that was the reality for us also. So what used to happen is like then the entire partnership is becoming opportunistic. And that also translated in some of the learnings, maybe both on the fintech as well as the banking side. If you ask the question today, not just about the evolution of the particular entities coming into play, but overall, the appreciation of what fintechs can add value to it, and as well as the banks also. So when we are into a conversation or when we are forging an alliance, the conversation is more strategic. And the participation from both sides are at a different level. It's not like, hey, how do I just maybe use fintech as a channel or push my card, or just C is like, hey, can the fintech just help me in origination? Now it's a lot more about co-creation. Now it's a lot more about like, hey, if you forge a strategic partnership, the conversation is going to that extent that what it means 4 years, 5 years down the line. The conversation is going also to that extent, like even in the banks in their, let's say, digital pro forma, they are fitting in saying that, oh, these are my partnerships in the fintech space, and can they add value in the journey in the next 3 years, 5 years? So it's a big amount, if you see, like it's a paradigm shift, right? Is it a sales call? Is it a transactional call? Or is it a pure strategic play with the fintechs? And there is appreciation that there has to be coexistence, and it has to be for the longer term.
So you're saying basically it's just not a distribution game alone?
It's no more a distribution game alone.
It's a larger strategic
That
play.
is right. That's right.
And Abhishek, if I can just acknowledge one of the things over there, and the point that Hemant made, right? I think 5-7 years back, whether we were doing a fintech partnership, strategic alliance, or a vendor onboarding, the processes were very similar. So that's where the feeling was coming from. But I think the last few years, 3 to 4 years, I think banks also have evolved to the point that everybody was making, right? That there are different treatments, different processes, different collaboration, different strategic mindset between a vendor and a fintech, and they should not be treated the same.
So now, out of the people on the panel, you work on the corporate banking side of it, and at least in the Indian context, D2C takes precedence. It's in your face. There's lots of action around it. But on the B2B side, corporate banking side, how are you seeing the space evolve? And there is another context to it that you're representing a multinational bank. So as a multinational bank, which has limited presence but dealing with all the top tier corporates, how are you seeing fintechs and work with your piece? You could share some examples or experiences, it'll be good.
Sure, maybe I'll give a few examples, and maybe we'll start with Enkash, right? So one of the products that we have for our corporate clients is the corporate commercial card, right? But then we spoke about commercial card acceptance, and also linked to Abhishek, your point on B2B payments. I think right now with the massive universe of B2B payments, there's a minuscule percentage of spends that actually get carded. So right now we are speaking to Enkash and looking at alliances where it's a clear win-win, right? Corporate clients who want to pay their vendors not accepting B2B payments, not accepting cards, then that's where the real strengths of an organization like Enkash and a foreign multinational bank comes in, which can really digitize that whole B2B payments through cards. So that is one example. I'll give maybe another example. A lot of our MNC clients, maybe in the FMCG space or in the pharma space, are looking through their supply chain for last mile digitization. That if they have the smaller retailers, how do we bank them and how do we make and digitize the supply chain till them in terms of the fund flow, in terms of the inventory flow. That's where I think the banks can again partner with a lot of fintechs for the last mile digitization, or even payment banks. We have precedents of partnering with payment banks for this last mile digitization for some of our corporate clients. That's the second space that we can see. The third space would again be from a perspective of one of the things around B2B invoice reconciliation. I think invoices, bank statements, and ERP. Those three-way reconciliation is a forever pain point for a lot of our clients, right? So similarly, being a foreign bank, we did a global tie-up on that with a fintech globally, and that we are able to take to our clients across the network, 96 countries, and in India as well. So that is again an example of tying up with a fintech, which is a common problem statement for all corporates globally. That problem statement in India is no different from how it is in US. So that would be another example of a fintech partnership of how we are looking at it in the corporate space. Maybe I'll give a last one, which has a different use case to it, which is that in India, from a liquidity management perspective, MT 940s, 942s, a lot of intraday statements, reports coming through, right? Then a lot of the ERPs, SAP, Oracle not being able to serve for that in terms of liquidity management solutions. So we tied up with a local fintech in India based out of Pune, where again, a lot of these intraday account statements, reports, receivables, payments can get digitized, directly read by the ERP, and completely automating that end-to-end liquidity management solution. So 4 examples, and for each the motivation is different, the purpose is different, but very varied in terms of the bank and the fintech partnership.
Super. Souparno, you want to talk about what your company is doing in terms of partnerships with banks, and where do you think there is interest?
Sure. So we are into payments, and as well as we are into lending. So we are a fintech NBFC, and on the other side, we are a PPI license holder. Our main partnership is focused on the lending side of things. And if you see from there, that standpoint, again, it's pretty clear in terms of the entire value chain, like what we can offer, be it in terms of the cohort of customers or the serviceability, the cost of service, how we can come into play and help out on those lines. Whereas, though we are a fintech NBFC, we are licensed. That gives that assurance and comfort even for, let's say, a bank and a large wholesale NBFC and us to come together, because there is assurance. It's like you might be driving a bus or a car, but you know both the drivers have license. So there is a strong assurance and comfort which come in. But I'll also accept we are not the guys who are the real guys who needs to manage capital. So when it comes to, let's say, in any sort of partnership, things around co-lending, it's obviously the banks who can really, really kind of help us on the sides of the capitals coming in and the accessibility around it. Whereas we come in from that aspect of not just from a technology, but the serviceability of the market, pushing the horizon around the financial inclusion mandate around it. So that's the way it kind of pans out. It's a very, very strong collaboration in areas of co-lending, in areas of other partnerships as well.
So Anuj, you're in the lending space. Lending is the talk of the town with almost everybody in the lending space, and that's where the monetization is happening. Separately, the regulator has done a lot of work. Every second day there's a circular coming in. In this entire marriage, the role of the regulator and what the RBI is kind of coming up with, how are you seeing that space evolve? And what's the impact from a lending per se?
Sure. We do lending under the brand name of MoneyTap, which is where we do credit lines, personal loans, etc. And Freo is the mother brand where we have savings product, spending product, and now credit as well. From a regulator perspective, listen, I think, like I said before, it's good that the bad apples get weeded out. Okay, when there any regulation that comes in, there are two things that the government or the regulator wants to do. Wants to protect the customer data, and wants to ensure that there is no, money movement that's happening outside of the regular laws, which is probably hawala or anything going outside the country and so on and so forth. So these are largely the two broad things. Of course, there are sub points, but the customer is protected, customer data is protected, customer complaints are protected, and money flow is regulated and it's not going in the wrong hands. These are the two large objectives. So if you are if you are following the law in letter and spirit, broadly you are okay. Now what happened is over the last few years, and obviously because of COVID or whatever else, suddenly they became a glut in the market in terms of saying that there are a lot of people wanting money because they wanted money, and there were people who were probably taking advantage of this situation, and that pushed everybody onto the wrong side of the law. And for that, the government had to step in and clean it up. Okay. Now, that's probably good for the industry because all the bad apples get weeded out, and people who are still standing, like I said, will have a better thing. Now, of course, it has some negative impact on us as well, wherein, generally the industry people will ask, okay, we'll wait for this regulation, we'll wait for that regulation before doing any kind of partnerships. Approvals take a little bit longer. The bank partnerships are going to ensure that everything is checked on the document. So a little bit compliance time, partnership time is taking more time. But those aside, it's generally good for the industry because the good players continue to act. Now, even as, let's assume that, I also represent an industry body, DLAI, Digital Lenders Association of India. We have about 100 members. About 95% of them were not impacted, right? 5%, and I'm talking about larger industry now, the entire industry, but 5% people were impacted. Out of that, half of them were probably not the right guys, and the balance half were somewhere pushing the boundary, and then they got regulated, they pulled back in. But it's probably fashionable to only write about that 2% people and not the balance 95% of people who've been doing business in the right manner, right? Now, doing the business in the right manner means that you might be growing slowly, you may not be having those headlines coming out every day, but that does not mean that the business is not sound, it's not growing, it's not doing well. But we all know only the 2.5% of the people that got badly beaten down and so on and so forth. And I think that is something that we need to be careful about as we evaluate this space. As and when there's more regulation, as and when there is more, there is more innovation, regulation will catch up, and some people will be on that side of the law, either they will push back in or it will be shut off. But net will be a positive move forward. I think we are in the period of flux right now, little bit, that you hear more on the regulation side because the previous years were where you did not hear about it. So they are also playing catch up. Maybe the next 5 years will not be like that. And there will be at least stability from a perspective of all what we were supposed to do is done. Please follow this law. If you're okay, you're fine. If you're not, you should be out. and there'll be stability. I think from a fintech perspective, the stability is probably what we want from a circular perspective. That's what your question was.
But there is another narrative to this. A young, engineering grad who's coming out wanting to start something. Today, he has to look at multiple regulatory aspects of it.
Sure.
It was at a point of time, probably raise a seed fund, go out in the market, try something new, reach out, try and cater to a larger market. Today, that space, when you talked about DLI, these are established players.
Yeah,
So
yeah.
think about 10 years back when you had started, if there were these kind of restrictions, would it have been easier? Or would you say that because of these regulations, at least there is clarity and they know what they can play in? Will this hamper innovation in some form?
Yeah, this is a common byproduct of any industry that gets regulated. But like I said, that there were regulations before also. Then people figured out how to innovate. Then regulations came up. People figured out how to innovate again on top of that. It's a catch-up game that will keep happening. So I don't see it such a big deal. Also, by the way, whatever our conversations as a company or as an industry body is, that the regulator likes to see this innovation and it'll look at saying innovation, then saying, okay, you know what, this is not the right way. Please have a dialogue with me and I'll tell you that this is not the right way of doing this. Maybe you can try this out. So they're very open to doing that. But maybe the young founder who's just about to start may not want to get into that hassle. But he or she should be able to run their business. If they're doing the first 1 year to prove product market fit in a small area, it's okay. It's not such a big deal. You can push the boundaries a little bit and then you start seeing scale, please go check and then you'll know how to tweak it out. But knowing from day one that what you're doing is wrong does not matter whether you're a young founder, old company, new company. If you know what you're doing is wrong and you still go ahead and do it and you are validating that idea by giving cashbacks, today or tomorrow you're going to go down. So I don't know, I don't think that's a starter anyways.
No, so just wanted to add here, right? I think, you mentioned about a young founder who is coming, right? I think, it's also important that, you actually learn or you actually have a subject matter expertise, right? In some way or other, right? If you don't have that and essentially you start, you do a startup, right? The very fact is that, you will always be focused towards scale, growth of the business, right? Which essentially means that, someone who is not having a subject matter expertise, somewhere or other way, right? Compliance, risk, information security, data privacy, all these things will, go under the carpet, right? Which essentially means that somewhere or other, right? If anything gets burst, right? The entire ecosystem is going to suffer. So essentially, on that side, I firmly believe that, regulatory frameworks are required for everyone so that, you actually tick all boxes to take care of data privacy, information security, compliance, risk side before, you get into the startup or, do any kind of a business, right? So that's kind of, my take as far as the framework is concerned, and the essential part is that everyone needs to understand this is also an important part, equally important as your growth and scale is.
Yeah, two things. One is there has to be a clear acceptance. We are talking about bank, fintech, separate DNAs, etc. The first thing first is we have to have a clear acceptance that fintech is different from high tech, and fintech is different from consumer tech, period. Now, if fintech is different, again going back to the point, then what it means from a subject matter expertise standpoint, and we have to kill in our mindset the false binary that, hey, regulation is actually going to be an impediment. We need to kind of have that kind of a pure, clear, holistic approach, understand what it takes to do business when money matters. So if you're dealing with money, let's get on board. Let's think through, maybe apparently it might look like, hey, you need to kind of take care of 5 different variables. So it's not about a local optima. You have to kind of see like, hey, globally, whether you're able to take care of regulations, whether you're able to take care of data, etc. But that's reality. So if I have to put it in Hindi, yahi satya hai. So you have to accept it. So even if you're a young founder, get charged about it, that you're solving fintech with all due respect to other sectors, come on board. Let's have fun. So that's the way I'll put it. One point around other point, second point around regulation, what's happening. I think the lowest common denominator is very clearly getting called out. The fact that regulation is there, the fact that the fintechs also are like now with licenses, etc. It's very, very clear that as a fintech, you operate at a different risk spectrum. As a bank, you'd operate at a different risk spectrum. But non-negotiable is, let's say, for example, compliance. So if you are regulated, if you have a license, the banks know that, okay, the compliance part is taken care of, and vice versa anyways. So I think it's getting a lot more deeper, it's a lot more clearer, and the assurance factor is getting a lot higher. So the trust between a bank and a fintech is going to just go higher up, again, thanks to the regulations.
Thank you so much. I guess we're just kind of getting out of time. We have about 2 minutes more, so if there are some questions, if the audience has, probably take a couple of questions.
Hi, good afternoon. Thanks for that amazing session. My name is Ushpinda. Just two quick questions, while I think Anuj and Hemant touched upon this. So we've seen the journey, right, where there was a animosity between the fintechs and the banks, and we've kind of come together to collaborate and work together. But are there any specific shout-outs to the bank and the regulator where you still feel there's some help and some support that fintechs need? That's one question for anyone. Second, I think hopefully winters are over, and I mean funding winters, right? Do you feel that geopolitics also plays a role when it comes to funding for the fintechs? Thank you.
Is that question for me? Okay. Okay. So I'll try to answer the first question, right? No, that's into the closed loop, but any which ways. So the first one, essentially, when we are talking about a special ask to the ecosystem and the regulator is obviously, he mentioned about that, it's not a IT, it's fintech, financial technology. And then if we are kind of, bringing regulatory frameworks, there should be a kind of, incentives also to be given to the fintechs in terms of, growing their path. For example, there is always an opportunity for a payments bank to become a small finance bank. There is always an opportunity for a small finance bank to, get a universal banking license. But if someone is doing a good job in fintech area, right, what are the incentives that are there, right? Essentially, that somewhere or other, regulators have also need to think around. If someone is compliant, doing the right things, appropriately, fintechs are to be, incentivized over the period of time. If anyone wants to add.
Yeah, I think I'll add on to the regulatory part. And do we have an ask as fintechs? Yes, for sure, we do have. So there are two parts to it, right? The hard part of regulations, in the sense like what is put in black and white. And the other part of is the softer regulation, in the sense like how do you actually cross the journey and arrive at a regulation? And once the regulation is there, how do you operate under a framework? So for sure, in a country like India, and especially if you look at in the lending space, still digital lending is a sunrise space. So we do need SROs, we do need self-regulatory organizations. That way what's going to happen is there would not be a shock factor. We'll also have an anticipation that's okay, how the journey is moving. We also have a better understanding working with the regulators. There should not be any assumptions. By and large, it will be like a working together to arrive at a regulation. And once the regulations also is there, the regulators also will have a lot of comfort if they know there are like, one or two SROs. If you see in the West, there are quite a few countries who have self-regulatory organizations. So that becomes an intermediary in terms of a very healthy regulation, and the shock factor will be taken away, as Anuj mentioned. The uncertainty also in many ways will be taken away in terms of interpretation of regulations. That's for sure one. Second is it's already happening. If you see even in RBI in terms of technological co-creation and innovation, right? So there is also participation in RBI IT kind of a thing. I think a little more of an expansion and more participation around those lines also will be helpful in terms of even for young founders, right? The question which was there, like as young founders, how do you do it? So they should also be able to feel that comfort, okay, it could be a port of call where I can use a sandbox and co-create and test it out, and the other guidance I will get either from the regulators or the ecosystem players. So these are the two asks.
I think on the geopolitical question which you asked, it's a very simple situation. It's like your 12th standard exam. You went for an exam, you thought, and there is something which is completely out of syllabus. Then you think this out of syllabus question applies to everybody. Now how do you deal with it? So you just then manage that particular situation there and then, because I don't think any founder or any company can figure out what tomorrow's geopolitical situation would be and kind of factor in that particular piece. I'm sure in our B schools you've studied scenario planning, but there is just so much to do. You would rarely do scenario planning around geopolitical situation. I mean, I'm just speaking on their behalf, but is this a fair thing to say? So you just, if things change, then you change your direction and you see, okay, what best can I make out of it? The only good part is that this change is applicable to everybody. So it's just not applicable to you. So everybody is grappling with it and you figure out your way through it. Any other questions? Probably the last question that says time's up. Monitor says time's up for us.
Yeah. So in last 2 to 3 years, especially the regulatories and Indian governments have launched various initiatives like OCAN and account aggregators. And in fact, last year's this digital rupees, in fact, a few months back, digital rupees was launched. So how do you think, what are the use cases? So I have two questions. One related to digital rupee. So what are the different use cases you think which fintech can play in digital rupee? So that is question number one. Second question is related to OCAN. So there is a lot of buzz around 2020 about this OCAN, but last year nothing much, you can say that use case which are profitable use case which are there with respect to the lending space or OCAN space. So how do you think the future of OCAN in the next 2 to 3 years?
So I'll answer the first one and I'll leave the OCAN one for the fintechs to answer. So I think from a CBDC perspective, the RBI view is around the replacement of the physical cash in our wallets, right? I think from a corporate space, we believe the real use cases would be in the whole B2C landscape. So when business to consumer collections, there are a lot of benefits that a UPI or an IMPS provide. I think CBDC can still play a role in it from a financial inclusion perspective, from a tier 2, tier 3 perspective. There is still the overall cash value post demonetization has got doubled. So that is again a play where CBDC can help us to increase the efficiency and the whole cash and check handling. So those will be the two key use cases that we would see from a corporate banking perspective for CBDC. Now the tougher OCAN one for the other panelists.
I mean, on the first question, right, I mean, if you are talking about OCAN, right, your question was around, we are not seeing much of use cases, right? I think, that is the system or an ecosystem which is getting built up over the period of time. There are, LSPs, there are, market players who are actually, integrating at the moment as well. There are certain inherent frictions which are there. But over the period of time, you will certainly going to see one ecosystem which is, typically working around OCAN, and we all, I mean, whether banks or fintechs, everyone is going to get benefited out of it.
So I think on the OCAN side or some of these other players, there are frameworks which are getting created. Those frameworks, people have to figure out how those frameworks work for them. And you do need to understand this particular piece. There are large dominant players in that setup. There are incumbents. They need to figure out how this piece will really work, and it'll take the journey similar to what UPI did when it came up. People really didn't come into it. A couple of people picked it up because it was something different from what others were doing. And then as it scales, it is democratized, it is involving a larger pool of people. So there is a lot of benefit in all of this, especially from a financial inclusion perspective. But if you look at from a company perspective, each company needs to figure out what is the play in that and how do they want to kind of approach it. Because each one of us would have our own strategy around it. But the fact of the matter is this is a common framework, or so to speak, a highway which is getting created or is created. Now, how do you want to use the highway? Or you want to crib about the fact that the tolls are higher, or, I don't have a restaurant on the side, this facility is not there, the toilets have not yet made. All of those things will come in. The highway is created. If the highway is created, for sure cars will come in, trucks will move, things will move. It's just going to take some bit more time.
So in current year or in next year, are you thinking OCAN has one of the strategy to build a business from your line of business perspective, especially the fintech space?
Yeah, absolutely. Yeah, okay. Last question.
Hi, my name is Prakhar. You talked about blurring of lines between fintech and the banking sector, right? Now, if you look at the rise of neobanks lately, like Jupiter, FI Money, OneCard, all of these are neobanks. They are offering banking-like services, but they are backed by an actual bank, right? Like maybe SBM Bank, Federal Bank, RBL Bank. So what's stopping those particular banks from launching a service like this rather than partnering with the said neobank offering the credit card? For example, one card is a metallic one card is being offered in the market, right? It is backed by Federal Bank. So what's stopping Federal Bank from offering the same service rather than partnering with a fintech like one card who is not as regulated as the Federal Bank is by SEBI or Government of India?
My take on this particular piece is I'm sure you will see this year a couple of banks launching their own, 811 equivalent, so to speak. You will see some of them happening. The names of the banks which you mentioned are not possibly doing it because their strategies is about something else, their focus area maybe of something else. They're kind of working or supporting a fintech today to try and reach out to that market, spend that money in terms of not just the brand, but the infrastructure to make it happen. Maybe tomorrow the banks will themselves do it. So it's a natural progression. I don't think it's a mutually exclusive situation that if you're partnering with somebody, you can't do it yourself. It's also a learning curve for them that is this a segment they want to do it completely digitally or should they partner with somebody today? Horses for courses. It is not relevant for everybody. I don't see today possibly a large bank, one of the top 3-4 banks, partnering with a neobank. They will try and do a neobank themselves. But the next set of banks may not want to do it today. They would want to kind of focus on some other core things for them today and partner with the bank. So it's horses for courses situation. And this new banking space is also evolving.
So
unlike
maybe,
some of the other international markets.
So maybe I can add, maybe we're not doing a good job of marketing, but Freo is the largest neobank out there, by the way. But anyways, we partner with Equitas Small Finance Bank, so we do have a partnership. We are not allowed by the law to have our own banking license as such and accept deposits, so we work with the bank at the back. Likewise, the other players that you mentioned, they work with Federal Bank, for example, and because they have to work with the Federal Bank. Now, your question is whether they can do it themselves. Of course they can do it themselves. And it's not that they've shut down their banking product, right? You can walk into a Federal Bank and open a branch. You can walk into Equitas and do it. Or for that matter, any other bank. You can go to their website, go to their app, and you can get it. But I think there's certain, like we discussed in the initial part, we bring our strengths to the table, right? We have a large, we've been in business for about 7 years. We started our journey with credit. We got pay later. Now we're doing banking. So we have a large customer base who we're able to offer the banking product to the savings product essentially. And that is something they cannot do because probably, we are able to create a product which is far superior on the app. It is digital. I'm able to bring in all the other aggregated product that I've launched over the last 7 years, which is credit from MoneyTap or the Freo Pay, which is the pay later business cards. I can bring all of that onto the same app, which might be difficult for them. Not to say that they have not stopped getting their own customers like through their own branches or anything else like that. Book My Show, for example, sells tickets on their own website, but they also power it for many other websites. That does not mean they cannot do the ticketing themselves, the other people that they power with. So I don't think it's a question, as long as you can play on your individual strengths and expand the market, it's a win-win situation.
I'll just give you one more example of this. In my past, role, I used to work with Paytm Payments Bank, and when we launched, this is a mobile app bank account. You never launched net banking or desktop banking. Now, if I was a large bank, some of the names that you mentioned, it'll be difficult for them to make those choices. They will say, I will have phone banking, I will have net banking, I'll have app, I'll have everything. A new age player might just say that, okay, today the customer is on the mobile and possibly will not go to a desktop and do a www, whatever, retail net banking portal. But could be different for a larger bank. It's also some of those choices, some of the time when you started, and as Anuj rightly mentioned, also it's the ecosystem which has got created. So customers don't think of a bank, they think of their use cases or their life, and the bank has to kind of support, or the bank account has to support in that. I think that's some of the other elements which kind of play while taking some of these decisions.
Yeah, if I may add on. See, here is the deal, right? We say money has no color. Same way, technology also has no color. So a lot of white space was created because possibly the technological forefronting was not done by the banks. Now it's happening. So that's the reason you are saying like, you know, the lines are blurring. They also can do what, let's say, fintech can do. But at the end of the day, tech is only one part of it. It's also about like the product, the placements, the consumer understanding, and how actually you want to kind of go to the customer. And what possibly you'll also see, especially in the neobanking space, it's the consumer. Today, if you see the neobanking target consumers in some ways is also a transitory customer, in the sense like if I'm a banking customer, what it takes for me to get into a neobank. But another 2 years, 3 years, 5 years down the line, you will see the large part of customers are actually neo-native customers. In the sense like their first port of call will be a neobank and possibly not a bank. So that will also see a different kind of attraction in terms of product and user experience expectation from the consumer, which possibly the banks might have to take the second seat and the fintechs will continue to actually drive the show.
So I think we're just out of time. Thank you so much, panel members. Thank you, audience, for the wonderful time. Thank you.
Thank you, Abhishek.
Thank you very much, Abhishek, and thank you to all of our speakers. Thank you very much for joining us this morning. And with that, ladies and gentlemen, I guess another very invigorating session. While we call it a wrap, I do hope all of our members of the audience also take some time off to connect with our speakers in case of any further queries. That being said, we also have a special address coming your way on artificial intelligence and how India can take the lead, featuring none other than Mr. Suresh Prabhu. And let me inform you that this is going to be a session wherein they're joining us live virtually. So this session will also be spearheaded by Dr. Virginia Sharma of Google Cloud. So just stay with us because we're trying to do a little bit of a tech enablement here in order to get both of our speakers online. So stay tuned and we'll have Mr. Suresh Prabhu addressing the audience.